we're about to introduce our panel on cryptocurrencies. And as Shaul Gelman just presented, and there's no question that Shaul is an international leading expert on optical illusions. The question we have for our panel that I'm hoping to receive an answer to is, are cryptocurrencies an optical illusion? Like one of these technologies? Or something that is a safe investment and something that we should consider investing our resources in? Without further ado, I'll just like to introduce our panel. You can come up. If we could get the lights over here. This is Josh Liggett from OurCrowd. Thank you. Together with Ofer Rotem, who's a leading Israeli blockchain developer and investor, and we also have Dr. Gal Landau-Yaari, who has worked for the Tel-Aviv Stock Exchange, I believe the Bank of Israel, and she comes from the more traditional banking industry in Israel, and hopefully through their debate, which will be moderated by Josh, we'll be able to tackle together the interesting questions regarding cryptocurrencies today. Please. Thank you.
Hello. Hi, I'm Josh Liggett. I work on the investments team at OurCrowd, leading blockchain and fintech. Thank you for that great introduction. Last year at the OurCrowd Summit, we had our first blockchain debate. It was a lot of fun. No punches were thrown, but some verbal barbs were definitely exchanged. The reason that we did that was because many people have heard about blockchain, and cryptocurrencies, but they don't really understand it. So what we decided to do was take sort of two different sides of the spectrum to sort of give a good understanding of what was happening so people could really understand blockchain a little bit better. So we have the same thing today. I'm really happy to have Ofer and Gal, both really good friends, up on stage. I'll let them briefly introduce themselves, and then we'll get to it. So Ofer.
Hi, my name is Ofer Rotem. I'm an angel investor in blockchain-related startups since 2013. This year, I've partnered with Adam Benayoun, the Israeli partner of 500 Startups, which is a VC based in the Silicon Valley. And we're opening Collider Ventures, which will be a venture capital fund that will invest in this field.
Gal.
Well, hi everyone, thank you. I'm Gal Landau-Yaari. I'm the traditional finance girl. I'm the former acting CEO of the Tel-Aviv Stock Exchange, and before the CEO, I'm the Chief Risk Officer of the Tel-Aviv Stock Exchange. This day I'm researching blockchain at the Center for Cyber Law and Policy, focusing on blockchain governance and crypto financial market infrastructure.
Great, thanks so much. So at the last debate, when the last thing that was said on stage was that blockchain was going to be a extinction level event for banks. So we're going to start off our discussion with, do you agree or do you disagree? What are your thoughts? Ofer.
All right, people don't really trust banks the post-financial crisis, right? There's a lot of distrust in the banks and in the rating agencies. And I think that the banks have realized that and are now opening kind of newer brands, right? They have these BitPay in Israel and a few others. And some of the banks are realizing it not only in terms of PR, but also they have new whole blockchain departments that are R&D departments. And the question is if they would be fast enough and quick to adjust, right? I think they'll have to change for sure. I think they'll lose the power that they have today, but I don't think they'll disappear. I think just their roles will be a bit different.
Well, I don't think it's an extension level event. It's look more like a build-up event because, well, I'm an ex-banker, so I can tell you that bankers don't kill you. They join you, but it's always by their own rules. And what we saw during the last year, that it's the majority of the traditional finance system is actually embracing Bitcoin. During the last year, we actually learned nothing about technology, finance, or even the evolution of money. I learned just everything about alchemy. We learned that Bitcoin and traditional finance, oil and water, do mix. We have proposal to have ETF on Bitcoin. We have Beckett from ICE. We are going to have crypto custodians. JP Morgan is going to offer derivatives on Bitcoin. So what is going to happen is that we are actually getting into a cycle that the big giant is actually going to offer a new crypto institutional asset class.
So we've seen that. So like you've said, we've seen rumors of of crypto trading desks. The Winklevoss brothers try to get ETFs up with institutional backed stuff going on for cryptocurrencies, and we've seen a lot of banks trying to get in and seeing Bitcoin or all these cryptos as just a different asset. But sort of what Ofer was talking about is losing control, which happens when, not to get too technical, when you start to have distributed ledgers and you're able to circumvent the bank. So what do you see the banks doing specifically that's sort of fighting against that in terms of retaining that? I'm not going to beat them. I'm going to like befriend them. So that sort of what you said.
Everybody can be their own bank, kind of.
Yeah, when everyone can be their own bank, like Ofer said.
Well, as I said, banks not just, a couple of days ago, it was JP or Merrill Lynch that through its research division said Bitcoin is not a store of value anymore, is a new institutional asset class. So what I predict that we are going to see a new regulated capital virtual market emerging. This is the obvious scenario. Because Web3 is coming and the traditional banking are already implemented digital strategy like all the big bank, JP Morgan, HSBC, Barclays, they are not going to settle but offer their client this new institutional asset class. They're actually going to build new business line around it. I'll give example. If you are crypto custodian, you are probably going to offer structured product around it. If you are Gemini and you are offering fiat stablecoin, you are probably going to aggregate a lot of financial services around it. So Bitcoin, cryptocurrencies, and blockchain fail to disintermediate trust. Banks are here, all the intermediaries are here, and even the Bitcoin ecosystem has its own banks. The big central stock exchange like Binance and Coinbase.
So going back to Ofer, first of all, and your response that you have over there, but second of all, we're talking about sort of open ledgers like Bitcoin, like Ethereum. The one big knock that many people have is, first of all, they talk about it all the fact that people are laundering money through it, which may or may not be true, and the fact that but the other issue is on the other side that they don't know who anybody is, but on the other side, they don't know, you can't imagine a bank ever going onto an open ledger where there's no privacy. So privacy has been one of the big issues regarding expansion of blockchain, expansion of cryptocurrencies. So where do you see privacy being a solution so that it actually can be a realistic implementation for a bank?
Well, so there is this constant tension in terms of regulation and compliance on one side, and the rights to privacy on the other side. I think that there's a project that we've invested in Collider called Beam, and they've kind of made a nice solution to that, where everything is completely private by default, but you can opt in and let your accountant or bank or government audit you. So if you want, you can stay completely private, but if you want, you can choose a few people to view your financials and transactions and everything. So I think this is kind of a nice hybrid model that can protect people in countries that have less financial freedom on one side, but also allow banks and large institutions that are regulated and are in areas that do have financial freedom stay in the boundaries of regulation and compliance.
I just want to add that in this case, Ofer and I are sharing e-revolution. It happens in Beam that based on Mimble technology is a beautiful project. I do want to add that when it comes to privacy, the landscape need to work to find solution because we do concern about our privacy. When blockchain combined with AI and tokenization, we do concern what will happen to our privacy. So I hope that engineers, economics, and academia will find solution to take care of our privacy.
So that's sort of talking about the extinction level events that we spoke about, but now and banking. But one thing that banks are doing is what the difference between a permissionless and a permissioned ledger. They're focusing on what's called the permissioned ledger. Without getting too technical, a permissionless ledger is something like Bitcoin or Ethereum, where anybody who wants can be part of it and can be somebody who helps authenticate transactions. Whereas a permissioned ledger is something that is closed off. Which theoretically could be similar to a regular database. Okay, we can agree on something else. So which IBM is working on, which Microsoft is working on, which JP Morgan is working on with their version of Ethereum called Quorum. So the question is, do we think that, just to the panelists, do we think that, where do you stand in permissionless versus permissioned, open versus closed, and is closed just another version of a Google spreadsheet? Gal. For you, flip a coin.
All right. So I think it really depends on the specific case. I saw companies that they were really doing a lot of hype, and at the end it was just a regular database when you do your due diligence, and nothing too special about that. But there is, for example, Kedit, that they do a permissioned blockchain. It's also a company that we've invested in, and they do zero knowledge proof. So if there is a group of institutions that they want to share they want to share knowledge with each other, but they don't want to share all the knowledge, then they can kind of input all the data to the system, and the system does a calculation on that data, and then can tell the other participants if they're compliant or not. So, for example, if I want to prove that I have above $1 million in my bank account just to be an accredited investor, for example, then I can have my financials on the system, and the system will say yes, I'm accredited. But the people on the other side won't know if I have $1 million in one or $10 million in my bank account, right? So it's kind of it relates to the topic that we spoke earlier. So this is an example of a blockchain that is permissioned. Only a group of institutions can access it. And with doing that, then you don't have to have all the you don't have to have a really big and bloated blockchain. You can have something that is more the architecture is thinner and faster and more specific to that specific problem that those group of institutions want to solve. And it's still a valid use case of blockchain, right?
But the problem with that is that it's not this extinction level event that we're speaking about for banks. It's not like a banking as yourself. So what you've just been doing basically is just adding a different type of intermediary. So is that in fact, even while we both like Kedit, and Kedit's a very, very cool technology. We both like Aviv Zohar and Yonatan, everybody who's involved there. But is that really something that's game-changing in terms of this revolutionary technology that people are talking about with blockchain, or becoming your own bank, quote unquote?
Yeah, so with Bitcoin, for example, this is the extreme example where nobody needs to trust anybody, and everyone can be in different jurisdictions and have their own laws, but there is an incentive model to make sure that everyone is playing by the rules of the system, by the rules of the protocol, and this system is costly. So and this is also, frankly, this is the use case that I like more, right? This is the revolution. This is what we had in mind in 2013. I'm more excited about permissionless ledgers in general, but if you have some constraints taken off, so for example, if the parties are in the same jurisdiction, or the number of participants is limited, and they can gain trust or compliance through means of law, either legal or their relationship, then it can also still be interesting, I think, and you can still cut some of the mediaries. So I think it's still valid to have a company, right, as an entity. And a company, when it interacts with other companies, then it still has intermediaries, middlemen that you can cut, and this is what Kedit does.
Well, I want to say two things. I think that regard permission blockchain, it's too early to say. We can mention Corda, which is not blockchain, but it's a premise, and I think very good. And they are going to an open code solution. We can mention SAP. These are actually following IBM. But I think it's too early to tell which enterprise blockchain is going to take. It's actually, it looks like, forbidden me, it looks like the ICO limbo. You pay your money, you take your chances. And I think that we need to look in two courses. When it comes to the technology, I can see that we are going to look through consolidation until the market will find what is the good solution. We will probably see a couple of consolidation. But when we look about the business models, the market is still too narrow. They don't give enough business models and business solution. So it's still too early to speak about promised blockchain, to see for where it goes. Cordacon is very interesting from my perspective.
So what you're saying, one of the things that when there was a talk that I was at where the head of Barclays blockchain spoke about how the investment in the blockchain space is like the internet in the 90s, but the technology in the blockchain space is like the internet in the 70s. That was sort of his line behind it. So that's sort of what you're saying right now, is that you're having all this investment into the space and all these things are happening, but the technology sort of isn't there yet to see any real use cases.
Yes, but as much as I recall, and I'm not a tech person, back in the 90s, we already had like eBay that was much more, we had a disrupted ledger like eBay, right? I remember it was scalable. Yes, we had a distributed architecture back at the 80s, and they were scalable, they were faster, they worked. Right?
It was more.
Yes. Yeah.
Would you argument that it was more? Would you argument that it was
nothing? Look, there is nothing new about distributed architecture. Let's just say it now, okay? And back in the 80s, they were faster, they were scalable. Webs like eBay and Yahoo already made it. I want to say something about open blockchain, because from my perspective, they are not decentralized at all, nor the Bitcoin, okay? If we take example of two organizations, which I well understand, stock exchange, like Bancor and IDEX, they are beautiful crypto financial market infrastructure. Bancor, for example, even bridges to public blockchain, EOS and Ethereum, but it's not decentralized at all. Their tokens actually have backdoor, and they control the tokens. IDEX, as much as I recall, a couple of days ago, just blocked transactions. And if we speak about the protocol themselves, and I don't want to get inside too theoretic discussion about blockchain governance, we can go and discuss concentrations of miners and depths and voting mechanisms. But I think that this discussion is unimportant at all. What's wrong about building centralized organization with decentralized tools? What's wrong about building centralized mechanism on top of decentralized protocols? Sometimes, we do need hierarchies. It's cost benefit. Not everything can be fully decentralized on a protocol when everyone is deciding about everything, especially when it's about other people's money. So I think that the discussion, open versus permission blockchain, is nice, but we are so abusing the word decentralized. I can tell you that in the academia, I can tell my student, I did sort of a test that I put some pocket money that everyone that is using the word decentralized needs to think in ahead, and when you use this word, they need to put a shekel into the box. So, by the end of the day, I think that open and permission blockchain, as much as Ofer and I are actually represented, those blockchains, are having the same growing pains these days dealing with this headache of what we are doing with decentralization.
Well, I think that the thing that brought me to this industry post the post-financial crisis and the demonstrations that we had here in Israel, the social justice demonstration and Occupy Wall Street and the Arab Spring, basically people were shouting in the streets. They understood that something is wrong, that the institutions aren't necessarily keeping their best interests. And Bitcoin seemed like a good step in a good direction. So even if, for example, Bitcoin won't replace the US dollar as the currency of the world, which I don't believe that it will, but it's still an alternative to. It's something that banks and regulators can look and people can view it as a competitor. And so this is we had a problem. We didn't know how to identify it, and Bitcoin was a nice solution. You know, this idea of decentralizing focal points of power. So that's why I would agree that open and decentralized open ledgers are more interesting. But I totally agree that not everything needs to be decentralized. I think that people can work well enough within groups of tens or maybe a few people, and above that, then you need some kind of a hierarchy. But when there's abusement of power, either because people are greedy or bad or even good, but they look out for their own interests, right? A company looks out for the interests of its shareholders. So for instances like that, then I think there is a lot of value in decentralizing those focal points of power, and when you do that, you get a system that is you level the playing field, right? Information is distributed equally amongst the participants. Everybody can make better choices, better financial choices. It's not these deals behind closed doors. But yeah, I agree that not everything needs to be on a blockchain or decentralized. Or for sure, you can build good centralized businesses on top of blockchain. Yeah.
So our last question, because we have to save the best for last, is ICOs. ICOs, you've probably heard of what an ICO is. May not understand it, but have probably heard of it. So over the past I think through the first half of this year, of 2017 to the second half of 2017 to the first half of 2018, $11 billion was poured into ICO investment. But if you look at October of last year versus October of this year, it's a 93% year-over-year decrease in investment, from like 800 million to like 50 million or some number like that. So during that time period, obviously there's been a bear market in the overall crypto space. Unclear when we're going to get out of that. So the question is, are ICOs dead? And if yes, why? And if not, why?
You start. No, you start.
We know what Ofer's going to say.
No.
I'm not sure.
King of ICO.
Okay, so
Ofer, by the way, Ofer, in case you don't understand, Ofer's VC fund invests in ICOs. So just to be clear.
no, so I might actually surprise both of you with my answer. I think that ICOs, well, 2017 for me was a good year in terms of financials because I held Bitcoins and their price rose. And it was good because I liked the attention that this industry got, but I didn't like the opportunistic play that some people from other industries, which I won't mention, came into the space and kind of used this new mechanism and hype around ICOs to raise funds for projects that were either outright scams or not, even if not scams, then immature entrepreneurs who were not ready to get money from the crowd. And I think ICOs as a model is not dead. I think it's okay to have business models that evolve around a token. Some of them might be more promising, some of them less. People, even like in a country like Israel, we have the shekel, and the value of shekel grows as we interact more with it and produce more, and you know, we keep that value within our system. So it's okay if you have a group of I don't know, we had a use case in one of the startups I've invested in that a group of DJs wanted to transact between themselves music that they wrote, tracks, and secondhand equipment. And they created a currency just for those transactions, and the currency was limited in amount, and they added more DJs to that ecosystem. It was nice, right? And it's a nice way to kind of keep your, it's like air mileage points, right? It's a nice way to keep your consumers within your ecosystem. So I think it's valid, but I also think that not everybody can be an early stage investor. I'm not a very good musician, and you know, in the same way as I'm not going to be a musician, maybe a singer, and not everybody can be a professional investor. I'm gonna do some karaoke.
Well, I'm actually, you might be surprised, but I'm bullish for ICOs. I thought, and it was already 2 years ago, that ICO has a great potential to democratize access to capital markets. You're probably familiar that not in Israel, high growth and SME has a huge problem to get to capital markets, and I thought that ICO has a potential. I think that the main problem is regulatory uncertainty and the regulatory arbitrage that we actually facing. Well, I hope the Financial Stability Board actually published a couple of months ago a draft regulation, and I hope that it's going to be effective, and what's happening with the ICO island like Malta and Gibraltar and Estonia and so on, because this is the main problem. The regime that needs to be done is what the Financial Stability Board and the G20 did actually after the financial crisis with OTC derivatives. I don't know which one is familiar, that they actually published regulation that goes all around the globe, and this is what needs to be done with ICOs. The main problem is regulatory uncertainty, and this is what we see across the board. I do believe that ICOs is a mechanism that we are going to see back in the mid of next year. We see nations like the UK that rethinking regulation about utility tokens. Even here in Israel, I can tell you that I'm sitting in a couple of roundtables at the OECD. They, again, rethinking regulation about utility tokens. I think that this mechanism, when it comes with more transparency and protection to investors, I do not agree with Ofer. I think that access to capitals and democratization to capital markets need to go also to investors, because one of the main problems here in Israel, that people in Israel do not enjoy Israel being the startup nations. I mean, because all of the startups in Israel do not list in the Tel-Aviv Stock Exchange, but they do not list in NASDAQ. They're just going M&A to all the giants. So I do believe in ICO. I do believe that we need to build mechanism for high-growth companies and SMEs, and I hope regulators will be smart to build regulation that give reliefs and also give protection to investors, to small investors, not just to venture capitals, because what happened during the last 18 months, unfortunately, we went back to public-based capital markets instead of decentralized-based public market.
Right. So I think that in terms of early stage startups, they are usually not ready to handle the crowds, right? And a startup in its first days is looking for, or should be looking for, in my opinion, an investor that can help them with a future round, that can help them build and share with his knowledge, share with them their network, get them connections to people who will use their product, help them with product market fit. So when a startup goes right off the bat to raise funds from the public, then what he has to deal with is thousands of people asking, when is the product going to be ready? When am I going to be rich? When are you going to be listed on Binance? And they need a whole team of PR presence and social media presence, and they need to pay large sums of money to centralized exchanges to get listed on, so people will be happy that they can sell off their tokens that they bought at a discount and make some money off of that. So I totally agree with the notion of decentralizing the investment space. I think it's good to give access to the people, and I agree that we live in the startup nation and not everybody can enjoy that. But I think there is a time for a startup to go and raise from the public, and I think that without the right tools, it will be hard to distinguish between those who are just scamming the public and those who are actually trying to build something, and the risks are high, and we do have regulation in Israel to some extent for crowdfunding. So you can raise money from the crowd up until limits. I think 10,000 shekels per. Not serious what we have here. Well, it's a start, right?
They should. I was part of it. They should just adopt the Jumpstart Act in Israel. It's a beautiful regulation that they worked, I think, something like 5 years in the state, and I was very disappointed that they didn't just take the Jumpstart Act that was adopted in the state and did the same in Israel.
So we could go back and forth for another hour, easily,
yes,
and a bunch of inside jokes that were made over here.
It's because Ofer is fun.
But just, we have about a minute and a half, 2 minutes left, so just a quick conclusion, what your thoughts are, the end of the last sort of word, please, Ofer, go first.
Well, first, I'm happy that I'm on a panel of a conference that is looking to reinforce Israel's economy. Looking back, 2014, 2013, I wouldn't have imagined to see this space grow, and I'm glad that this space is being taken seriously. So thank you all, and I hope that you'll pay attention to this space and invest carefully, responsibly. Yep.
I can just add that thank you for coming. Thank you for coming to Israel and listening to the space. Well, I am the traditional girl, and I chose to research this field, and I have the privilege to live and learn. Thank you.
Thanks so much. Really pleasure to have everyone here.
If you could just stay there for a minute. If you just stay there for a minute. Thank you very much. A very interesting debate. I think this crowd that you're speaking to here are mostly Christians, evangelical Christians from around the world that support Israel. And
thank you.
Everybody in here, I think, shares your excitement with the very fast rate of technological development. But at the same time has serious concerns, and not just about fraud towards investors in an initial coin offering and so on and so forth, but the use of cryptocurrencies for underworld operations, human trafficking, arms trafficking, and things that are just blatantly illegal. Is there any way to monitor these currency exchanges to prevent that type of criminal activity, to make sure that technology is serving our values and not destroying the values that we believe in?
So I can answer this one, actually. I'm sure they can, everyone, the panelists also can. But first of all, I'd recommend, there's a woman by the name of Catherine Hahn. She was the first prosecuting attorney for the United States for cryptocurrency crime. She's now the head of Andreessen Horowitz, one of the largest VCs in the world, their $250 million crypto fund. She has an amazing speech on TED about how she caught people on Silk Road using cryptocurrencies. Because although it's public, it's like all the names have turned into like hexadecimal sequences, A1, B2, whatever all that is. You know who, it's all in front of you. Like cash is so much harder to track than cryptocurrencies because you have everything sitting there open in front of you. And you just have to know, it's just A and B and C, and you just have to label everything. So that's the first thing. The second thing is there are a lot of companies out there. Beam is one example that Ofer spoke to, where they specifically have a tie-in with regulators. But the other one is there's many companies out there that are doing exactly what you're talking about. Monitoring, because I don't know if the panelists would agree, but this is bad for cryptocurrency, this is bad for blockchain. When people say like, oh, Bitcoin, you just use it for Silk Road. So there's like 10 companies, I don't know them by name off the top of my head, but I've seen them around that are working. I'm sure, Ofer, you've seen a couple, you could probably name a couple by name, that are specifically working on this tracking ability. Do you want to?
No, but I want to say something totally different. You know, people will always exploit technology for criminal things. We need to verify that we do good things with technology. I'm involved with pro bono, of course, with couple of beautiful things that blockchain do for social impact. So there is beautiful thing that we can do with technology. You need to remember that it's not just blockchain. I mean, from the beginning of the internet and the personal computer, people will always exploit technology for bad and criminal things. There is just this buzz about cryptocurrencies. So we need to choose to do good.
Yeah, exactly. Couldn't agree more. People were talking about this same thing about the internet and how people were exploiting the internet for bad things that I will not mention. And the internet has done much more good than bad, I'd say. I mean, it helps us connect with everybody, and I think that we're all responsible people here, and we want to do good for Israel and for the world in general, and And we got to put our money where good things happen, right? And not participate in actions that are bad for us, right? That are bad for our interests. And cryptocurrency and blockchain as a technology is agnostic, and people can do good things and bad things, as in every other field of technology. Yep.
But did I understand you, Josh, correctly when you're basically saying that it's easier to monitor cryptocurrencies than actual physical cash?
Unless you're using, yeah, I think that's yeah. Unless there's like, if you're using a zero knowledge proof, if you're using Beam, where you specifically Zcash, I mean, we can get into Zcash Monero, which we whatever. No, the super technical answer is it's much easier. Getting into technical, there are ways, like Gal was saying, there's always a way to get around it. You can use a scrambler, you can use all these different things.
But then when you want to onboard and take the money and use it somewhere, then they'll ask you where the money is from, and it'll be hard for you to prove that the money is legitimate, and people won't use that money. So it hurts fungibility when you're doing those type of things. So it's really hard to launder money. And
you also need to remember that we have more and more regulation, which is good. I think that we are planning to have KYC4, which means you don't able to do mixing. Today, all the stable coin, for example, doing KYC. So, I mean, not like anonymity coin. So there is big questions about the future of anonymity coin, whether you are going to be able to trade them, but regulation is coming and KYC4 is coming, and it's a good thing. So I think that regulation is another layer that is going to prevent from people to do criminal things. And as much as I recall, during the last year, cash was much more dominant with criminal activity than cryptocurrencies and Bitcoin because of the regulation. And again, this is a good thing. And this is what actually I said, when you have regulation uncertainty is bad. I mean, it can be proved according to economic models.
Thank you very much. Thank you, all of you, for your
Thank you.
Appreciate it.